Zac's Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zac's Rank Buys. A specialty plastics company and a credit company top this week's list of aggressive growth stock picks. Bill Wilton, our aggressive growth stock strategist, here with us once again to fill us in on each of these companies. We're going to go with the specialty plastics company first, company called China XD Plastics, CXDC, the ticker symbol. Let me guess, they're based in China.
You got it.
Hey, I catch on quick.
They're also in plastics, which you guessed right off the bat too. But what they do is they make specialty plastics for interior and exterior trim on automobiles.
Okay.
One thing I like about them is that they work with over 70 different brands, so they don't have that customer concentration that really puts a lot of these auto suppliers at risk sometimes. Their last earnings report was back on November 15th. It was a very good one for them. They saw revenue coming in at $104 million, which was almost 60% higher than the year before. The management also described it as record revenue and profit growth. So they are really explosive right now, and that led to them coming in ahead of expectations, earning 34 cents a share, beating the consensus by 3. One of the things to remember here, though, there's only one analyst contributing to that Zac's consensus. That does give you a little bit of risk because one person could easily be wrong, but that also leaves room for bigger surprises and larger upward revisions, which is really what starts driving stocks, to a lot of those big gains that we'll see.
Well, it's interesting too that the pullback in manufacturing in China is not impacting this company in particular.
Yeah, and part of that is because they work with such a wide breadth of auto manufacturers. It's different regions all over the world, so. I wouldn't be surprised if they do see a pullback, if we see more of a global slowdown in the auto market. But right now, business is going well for them. They're also trading with pretty good valuations here. You can see the PEs in the single digits. PEG ratio is almost non-existent. They're trading at about 0.7 times the sales, and with a price to book of about 1.5 times. So there's a lot to like there, even from a value standpoint. One thing that I was a little hesitant on was the chart. It does look like shares are hitting a bit of resistance here, but given these valuations, given these expected growth rates, which are about 25% this year, another 28% next year, it's very plausible that this stock will break out soon, and there could be some very big potential gains ahead. All
right, Credit Acceptance Corp is that credit company that I spoke of, CACC, the ticker symbol. This is a credit company, again, that provides credit just for auto loans.
Yeah.
I guess a thing going with autos here this time.
I try to keep them interrelated, Terry, keep it interesting. But what they do is they focus on, the less creditworthy clients that are seeking auto loans. Whenever they say regardless of credit, that usually means we'll take anybody.
The subprime group.
Yeah, exactly. But they don't package it up and resell it. So what they did, their last earnings report came on November 1st. That was also a great report for them. This was their 6th consecutive earnings surprise. They saw revenues grow about 20%, and earnings came in at $1.88, beating the consensus by 13 cents. So things are looking very good for them. Also, the valuations are attractive here. They're trading at about 12 times estimates, which is pretty good, and especially with the growth rates that analysts are expecting, about 32% this year, another 16% next year. And, one of the very telling signs that I like to look at is this 5-year pricing consensus chart. You can see the long-term trend of the earnings estimates in those colored lines. Each one is one particular year. You can see that not only are they growing year over year, but then throughout the year, the estimates are still moving higher. That's why you can still justify getting in, even though the stock is this high. It's not too late to get it to the party.
All right. And speaking of parties, do you own either of these two?
I do not.
All right. We have other stock pick ideas for you, and they are on our website, Zac's.com. Matter of fact, they're right on the home page. If you're not there already watching this video, get to Zac's.com's homepage and scroll down, not too far down the page, until you see the stock picks that we put up there for you, 4 new ones, 1 in each of the investing categories that we write about on Zac's.com. With Bill Wilton, I'm Terry Ruffalo.